Hi guys, welcome back to another important video. In this video, we're going to talk about Nifty's plan for next week. Now, this plan has already been discussed 3 or 4 times before in the previous videos. Market has not moved. So this is 25,700 to 800 zone. And from the 14th of November, market has been stuck in this 500 point zone. Yes, this is a distribution phase in the market, and we have talked about this in detail in the previous 2 videos. Also, we had our time cycle. Now time cycle has started, the major time cycle, and we are expecting a move to start in this time cycle either in the beginning or in the end from 500 to 800 points. All this has been totally discussed in the previous videos. Now quickly to recap the previous video, what did I tell you is that this zone 25,842, 25,899, this was your pre-market open, and this is the first candle open. Now this difference is only caused by your biggies, the big players in the market. So what did the market do right now? In last week, it respected this zone and bounced back higher. There are some anomalies in the market, like your put options, which I'll talk about it recently, what happened on Thursday. Here, if you see this put option weekly, so this is 26,200 PE. In the Telegram group, I gave you a message in the live market stating that somebody has shorted this put option. You are here at this point on Thursday last week at I think nearly between 2:30 p.m. So 2:30 p.m. to 2:45 p.m. And I think after that I've checked this, verified it, and then put a message in the Telegram group that somebody has shorted a put option of 26,200 PE weekly. That is your 9th December. This is not it's not normal, it's abnormal. Why? Because price action on the right side, if you see, I'll just show you, this is Nifty's chart. On the right side, market was trading at this point. Market was trading at this point, and somebody took deep in the money, right? In the money, put option short. So they are expecting the market to bounce. You understand? The market to go higher. My entire research, what I do with these options is to understand the footprints. So I want to understand the footprints of these operators. What is my thesis? What is my objective? Is that to debunk how do they do it? So many people, what do they think? Retailers is that price is moving up because somebody's buying the market, right? Everyone thinks that somebody's buying the market. That is why price is moving up. But in my own volume analysis research, what I have seen is that price, before it moves, operators build their positions. I don't understand how they do it and why it happens. What is the mechanism? So that is what I'm debunking and trying to find out. So I have seen this unusual activity in 26,200 put option, which is 200 points away. So price was trading around 26,000 here. Okay. And 200 points away at the closing of Thursday, somebody shorted this put option. Next day, what happens? It falls. So shorting put option means price has to go up. So that is what happened. And still it is unexplained of how do they do that? How do they create a big position here? Did they know that the market is going to go higher, or we don't know all that? So anyway, this is one of my research, and this is what I've shared in the Telegram group in the live market. Those who are connected, you must have seen this in the market live. Now, in the previous video, we have discussed 2 things. I have seen one condition for a positional short setup, where I told you in this major time cycle zone, if market goes high, fakes out and comes back down, this is when I will consider for a positional short. Most retailers will look for a breakout here, correct? This is where everyone will think breakout, and they will look for a big long position. This is what I'll do is the exact opposite. I'll look for a short setup here based on this levels confirmation. Same thing on the downside, where I told you that market, when it breaks down the zone, I will look for a positional long setup. People will look for a positional short setup. I'll do the opposite. I'll look for a positional long setup. All this we have discussed in quite detail. Only one scenario we didn't discuss is that I told you I'll discuss it if it happens. This sideways price action where the top has not been broken, where the bottom also has not been broken. What if the market is in sideways mode here? What to do? There are only two clear options we have here. We can, like I told you, I will only look for positional longs if market breaks below this and reverses. And that does not happen. So I will only look for a long setup. Even if market goes 500 to 800 points rally, I'll look only for intraday setups using my own pressure signal indicator. Those who know about it, they know about it. Anyway, so if market rallies from here, I look again for intraday setups in longs only. I will not look for positional setups. The reasons, again, I have been explaining it since I think past 3 or 4 weeks, why this market is weak and it can reverse anytime. Same thing on the downside. Now on the downside is more tricky. We have a nice drop here, an ABC pattern which is unfolding, and then this, if we get a new top on Monday or Tuesday, what I'll look for is very simple. Here I can trigger a positional low risk setup. How will I do that? I will take the range of whatever swing high here. I will mark the midpoint. I will attempt a short setup here. If price is sustaining below the midpoint, as simple as that. If it reaches here, I will plan to move SL to cost, something like that. Okay. So why I'm doing this is because this can be an clear cut A, B, C pattern. Clear cut ABC pattern. Okay. This is nothing but one of the corrections in our wave theory. We know that, and price is moving a bit slow in the start here. So this slow movement of price is almost telling us that this is part of a wave B also. Can be wave X or wave B, whatever, but there's a good chance price will come down here. Now, how do we connect this with other indices? Now we have your Bank Nifty. Bank Nifty also is doing the exact same thing. We expected a wave 4 in Bank Nifty. We got the wave 4, 38-50% zone has come, higher time frame, and then market again started an A wave here, or X wave, you can take W, or B wave here, whatever, and some C wave or Y, does not matter. Here it is a 3-wave pattern, that is for sure. Now this 3-wave pattern has only 2 choices here at the moment. It can go like this, slow choppy move up, or it can do this pattern, ABC pattern, like we discussed in Nifty. These are the only 2 options. So what we're going to do right now is the same logic for Bank Nifty also. The last rally, take the midpoint of it and then confirm the fall. So if Bank Nifty falls, Nifty will fall. That is quite obvious. You can say yes, it can go sideways also. Price can go sideways also like this. Yeah, sure. But this is a very rare case right now at this stage of the market. The reason I've been telling you is past 15 days, past 21 days, the market has been distributing already. So it will not look for a further case of distribution. It will look for a first thrust in the market. So it will try to breach one of the directions, one of the sides. Okay. Anyway, what are these levels now? What are these levels? FRVP, I think everyone knows what is FRVP. We have 4 lectures in our YouTube channel, and these are very, very important lectures. You can combine them with any method. FRVP, you can combine it, smart money concepts, your GAN analysis, your Astro, all that you can combine FRVP. It's up to you how you use it. I have told you the basics, how I look at it, and traps, how to look for it, and the settings which I have. Okay. Now you see here, when I zoom in a little bit, I'll show you some anomalies here. This area is telling us there was major buying activity, and here there's major selling activity. So like I said, the first question, debunking, if there's major selling or some amount of huge selling, price should break down, right? Why did the price reverse exactly from here? You can see this profile. So this is another case where, this is just retail activity here. The last end of the fag end of the fall, where retailers try to, after this fast breakdown, retailers try to enter, and that's when the market reversed. Anyway, these are different profiles. This is a secondary node, and this is where prices come and stuck. I've shared these entire levels in the Telegram group in the live market, and that was towards the end of Friday. Right now, the game is very, very simple. What am I looking for and how do I plan? It's the same analysis, and how do I see the levels? I'll explain it to you. Simply connecting this with your higher time frame, which we have in the time cycles. If I just use the same logic here, that on the upper side, which I'm looking only for as long as this zone is intact, not broken, I will look only for intraday longs. So this zone will guide me here. This is nothing but 26,165 to 26,000, your 210. Okay, so this zone here will guide me. This node, this is the spike here, right? This zone will guide me whether I can continue to look for upside or not. This is the last stand for bearish trades here. This is the last stand. So what do I mean by last stand? This is the last line of defense. So above this, you want to see price turn from resistance zone to support zone. That will be even easier. You don't want to get trapped in a fake out. Let price come back, become a support, and then rally. Okay, this is a very, very simple. Either way, I'm using pressure signals indicator. So that is independent of price action. Does not care of what price action is doing, what levels are doing. I just have a separate method there. Anyway, fall here in this case from here. Simple. Like I told you, this is an incomplete structure. Might be on your Monday morning or Tuesday morning, you might see a small high. What will I do here? Same thing, same logic. Use this range, draw the midpoint, and then confirm for a fall. I can even use this zone if market does not reject, sorry, it does not cross this. I can use this as OTM option selling setups, right? I can use it as OTM option selling setup. So 26,400, 500 or 300, I can sell these call options just to capture this range of price. Now, basic idea, you've understood what I'm looking for. Now, what is this gap? Old gap. This is not an ordinary gap. This is a very powerful gap. It is historical. And for the past 2 months from October, it has been playing a very, very important role. Back here, you can see it's obvious that market gapped up and then price came back in this gap. It did not completely cover the gap. It went up again. So if I just go back a little bit more, I'll just go out, zoom out. Okay. If you see this entire gap historically, this was one of the consolidation areas. Now, before the consolidation area, it was acting as a support zone. Before that, it was already a gap. So these are different activities of price, right? All these activities of price happened exactly in this old gap. So this old gap might be, for humans, you might forget it, but machines don't forget it. It's very important. And they have triggered the previous rally from the market from here. Okay, they have triggered another rally from here. So this is definitely some sort of a midpoint or some sort of a fighting zone for the machines. They know this level. So if my fall comes, if any fall comes, I will target this zone and then we'll think about any other, further breakdown or bounce from here. So first, let the market come here. Don't plan for 19,000, 20,000, 2,000 point fall, 1,000 point fall. Focus on what's right in front of you first, and then plan for your setups as accordingly. Now, question here is, I told you something very important, range. This range, how do you plan for a setup in a range? What I'm going to do is I'm going to conclude this video by telling you two important points. Since this analysis is very easy, I'm going to talk about how to build a setup or a strategy. When do you do that? First step is to learn analysis. Okay. This should be very, very clear. I can't emphasize how much time you must spend on doing analysis. After doing analysis, whatever method you use, you must have clarity in market structure. Analysis for what you're doing? To understand market structure. Clear? This has to be first thing. Now, once you understand market structure, you are looking for entry setup. Okay. Like I said, N pattern is an entry setup. Nowadays, smart money concept, fair value gap, your OTE patterns, your support breakdown, support turn to resistance, all those basic candlestick patterns, all those are entry setups. After you find your entry setups, what are you doing after you find your entry setups? You are applying a strategy. Now, this is where your option selling comes, your credit spread comes, option buying plus selling, option debit and credit spreads, both combined, your futures comes. So you have tested all three one scenario 100 times, and from that 60 times you are profitable. So this is nothing but your 60% win rate. Okay, this is your 60% win rate. So you have done all these three things, and then you have ended up with a strategy which requires entry setup, which requires a certain market structure. What retailers are doing is exact opposite. They're entirely focused only on this part. You don't know when to apply the strategy if the market goes sideways. You don't know if there's an entry pattern here. You're just blindly applying the strategy. That is what is being taught on YouTube. That is why all the masses are following channels where you discuss only strategies. First, you must discuss market structure, and based on that, your strategies are built. Okay, this is the first step. That is why I told you to study market structure. We use wave theory. This is the highest order of price action available to us, and this has been working for more than a century. All right. Anyway, let's get back into the main point here: zone and a range. Finding a zone. Now you can find a zone using FRVP, you can find using support and resistance, you can find using Elliot wave theory. So your analysis, your market structure analysis helps you find a zone. Now finding a zone exactly from where the market is going to reverse or turn is basically requiring high amounts of skill. Okay, high skill is required. Now if you change the idea, I don't have that much skill, can I do something which is easier, which I don't need to focus so much on? You can focus on range. Now what is the difference between a zone and a range? This is a small range. Zone is nothing but small, very small range, 50 to 60 points. A range can be between 100 to 500 points range. It can be more than that also, depending on your view of the market. So anyway, this is a larger zone, big zone range. So what I'm going to discuss here is understanding a range here. So we'll go back to your time cycles chart here. In the live market on Thursday, I think, yeah, Thursday towards the close, I saw some build up, like I said, of the put option, and also 26,000 straddle. So straddle is nothing but call option sell, put option sell of weekly. So this is weekly straddle. So somebody has built up a straddle. What are they expecting? When do they do this? When does someone build up a straddle of 26,000? They are expecting the expiry, your 9th December expiry. This is an example I'm telling you, don't take it literally. They're expecting the expiry to happen near 26,000. Okay. Now, if big players do it, your big hands, your operators do it, they know that they're going to bring the market near 26,000 once near your 9th December. That is your Tuesday expiry after this weekend. This happens when they are expecting a limited range in the market. That is why this strategy is applied. And they have some break even points. They have some break even points. That is the safety. If market goes above this, they have to start making adjustments. If the market goes below this, they have to start making adjustments. So that will change the strategy entirely. So their main view is they're expecting market to be in a range till the expiry. Okay, till wherever it goes, market will once try to come to 26,000. That is their expectation. So here, this is one type of range analysis, first analysis. This is what everyone on YouTube, on all textbooks, on courses, they discuss. Find the next range where the market is going to be. Something which I'm going to tell you now is totally against it. Where is the market not going to be? Second type of range analysis. Market is not going to be here based on your market structure analysis. Market is not going to be here based on your market structure analysis. So if your analysis is telling you market is not going to come to 25,500 next week, what you can do is you can plan for out of the money option strategies. This is how you plan. So you're using two types. So if this is not clear, this is where most of the money is made to predict exactly where your market can close on 9th December. That is nothing but expiry day. Okay. You can also make money from outside the money, outside the range, OTM strategies. You can just find out where price is not going to be. I've given one simple strategy in the Telegram group. I told you theoretically how to follow it. And I told you that even if you post it on the first page of the newspaper in big bold writing, people will not follow it. Why? Because it is so simple. It is so simple that people are not used to some simple strategies. They want all complex adjustment, this thing, that thing, 5% return, 15-minute time frame, this breakdown, 1 hour chart correlation, all that complexities they want. Then only then they'll think, oh my god, I'm doing something great. The most simplest strategy which will give you returns, I've given a Telegram group, the most basic one. If you print it in the front page of the newspaper, still retailers won't follow because they're programmed to follow something complex. They don't want simple. Okay. Anyway, point here is that this is how you can use range and strategies. Your market structure, education, your entire thing has to come down to this. Only then you will know which strategy to apply. I hope you have learned something new in this video. Definitely leave a thumbs up and a comment if you want to learn something more. In the future, I will definitely post some videos of option strategies and how to rely it, how to connect it with the market structure. Wait for some time, have some patience. There are more projects going on. I will tell you when it will come out. Thank you guys. I'll see you in another video. Till then, take care and be safe.